Hello guys and welcome back to the channel. So in today's video we're going to take a look at Tesla and Palantir and the inflation report that has just come out because the market has reacted very weird. So I'm not going to hold you up. I will get straight into the video. This is going to be a very cool video if you're a long-term investor. And I believe it will be a very, very good video. And as always, if you like this content, please make sure you subscribe to the channel. And if you want to go even further, you can help me out and join on Patreon and get extra bonus content and exclusive videos. For example, I have uploaded a video this week that explains my stock market strategy, and I believe it can give you very good different viewpoints about investing and the stock market. So let's get into the video. So the inflation report has just come out, and I feel that we need to be careful with Tesla and Palantir, but not the way that you think. The market has reacted very weird on this inflation report, and I want to go into it a little bit. Basically, what happened is just days before, the expectations were lowered from 6.7 to 6.5%, and this should be very bullish, right? And there was all these reports coming out that were explaining if the inflation report comes in hot, then the market is going to crash. If it comes in as the expectations or even below expectations, the market is going to rally. And the inflation report, as I said, or the expectations were just lowered before it came out, and everything came in line with expectations. And I actually want to show you the report. Here is the full report, and many people had mixed opinions about it, and that is partially because energy came down very nicely, but food and housing were still pushing up the report. Now, we know that housing is a very, very delayed indicator, and if we look at real life indicators, we see that rents are coming down in the US and housing prices are coming down, so we know that that is a false part of the report. And food came in with an increase of 0.3, which is, if you times it by 12, is still a very, very big increase. But if you look month over month, you can definitely see that the trend is going down. So if we look at the overall picture, we see that energy, very good. Housing, we know it's a false number and it's delayed. And food was the only one that was going up, but even that one is definitely trending down. And if things continue this way, it will look very good in the future. So by all expectations, the market was supposed to rally on this news, and it didn't happen. So this led me to think about this, and I came up with a very interesting theory about this. I believe that the sentiment has gotten so bearish that we are bottoming out. Now, how crazy do I have to be to think this? Well, I want to run some numbers with you. Tech and innovation has been in a bear market since 2021, and Palantir has even been in a bear market since January 2021. If you don't believe me, go ahead and look at the chart. So that's 2 years bear market, and many of the innovation stocks, for example, like Teladoc, has been in a bear market since almost 2 years. Now, I posted a picture here about the average length of a bear market. This length is, the average length is 330 days, which is just under 1 year. And we are way past this. We know that the bear market started in November 2021. We are in 2023. Of course, this doesn't mean anything, but we are towards a longer bear market now, which should mean that the end is near, right? So here are some things that we have lived in this bear market, right? So the crypto bubble has completely collapsed. Almost all crypto exchanges went bankrupt. The innovation has become devastated. Look at Cathy Wood's ARK fund, completely devastated. And normally when, you know, the stocks are falling, investors flee to the bond market. Super rare, but this year even the bond market is down. We know that real estate is devastated. We had a war that broke out. We have the highest inflation in decades, and we have the highest interest rates increases since Paul Walker, right? But all of these are last year's news. Think about it. We know all this already. And this is what got me thinking that we have to be careful because, when the market is peaking, the expectations become unrealistic. For example, when Tesla was at $400 or Palantir was at $400, think about it. What did that mean? At the time, for example, when Tesla was at $400, you were pricing in perfect executions for years to come. You basically didn't have an upside in the stock. You were looking at, okay, if I buy Tesla now for $400, in 3 years, the stock is going to be worth $400 because they execute perfectly. In other words, you only had downside. That means that your risk reward was completely 100% off. You could basically only lose. Your best case scenario was that the stock didn't go up and you could only lose. Now, the exact opposite of this tends to happen in a bear market, and you need to be very careful not to be trapped into this. So at the bottom, everybody is going to be bearish, and all the expectations will start becoming completely unrealistic, just like on the bull side. People will say, don't buy Tesla at $100 when it's 75% off from the highs because it will go to $60, or don't buy Palantir at $6 because it's still overvalued and it's going to go to 4 or 3. And Palantir at $6 is 86+% off from its highs. So remember, no one knows the bottom. And in fact, I have already once called the bottom in last year autumn, and I was clearly wrong in calling the bottom. But the thing is, when you're a long-term investor, you don't have to time the bottom perfectly. And I want to show this to you. Let's take a look at Apple in 2008, in the middle of the great financial crisis. You can see that it went down to $3. Now, imagine that you're not buying Apple at this time because you think it's going to go below 2. So you're not buying here, you're not buying here, you're not buying here, whereas you could have built a very sizable position buying every month, $1,000, $10,000, whatever you could do. And then the stock starts going up. And then you say, this is a dead cat bounce. Okay, I'm going to go and wait until it comes below 2. And look what happens. I mean, the rest is history. We know that the stock has almost 100x since then, and you just missed the buying opportunity of the century. This is why if you're a long-term investor, you don't have to time the bottom perfectly. You just have to get in when the price is really, really good or silly good or is a steal price. And you have to remember, at the bottom, everybody, including you, will be very fearful and everything will look very dark. And everybody is expecting the worst. Now, if you turn on CNBC, look at YouTube, everybody is saying that 2023 is going to be a horrible year. And at best, it's going to be a 0 year. People will consider it a win if we don't drop this year on the stock market, but nobody is expecting the stock market to go up. And this just might be the reason why it is going to happen. I am a very avid YouTube content creator and watcher, and I have seen perma-bulls like Jeremy Financial Education and lots of other creators. Tom Nash has started going bearish much earlier. But even Jeremy now in December was saying that he's waiting. He wants to see what happens with the market. So that means that the biggest of the big perma-bulls are even staying away from the market. And the question is, who is there to sell? You have to remember that for the price to go down, you need to have a continuous influx of seller in a higher and higher volume. But what happens if you run out of sellers because everybody thinks that the market is going to go down? So they position themselves and everybody moves to cash, and there's no sellers left on the market, only buyers. That creates a very, very nice market. And think about it this way. Look at what are the bad catalysts for 2023 that can happen. Now we're going to look at risk reward. So obviously you're going to tell me, look, Vince, we might be in a recession in 2023. But the problem is we are probably already in a recession, and that is not a bad catalyst because everybody knows about it. And frankly, I believe it's priced into the market. So the real bad catalyst that would happen in the market would be a nuclear war in Europe. because even just the war is not news anymore. That's already priced in. We know everything about that. So the war would have to escalate in a very, very serious matter for that to be bad news, right? And this is where, start thinking about what is the chance of that happening. Let's say that the chance of this happening is maybe 5%, maybe 3%, but let's say it's on the not very likely side, right? Then the next possible bad catalyst would be China attacking Taiwan. This is also highly unlikely because of, what happened with Russia and all the sanctions, and partly thanks to Palantir. Very unlikely that it will happen, but the possibility of it is not zero. Then inflation could pick back up. Again, what is the chance of that happening when the interest rates have been raised so high and so fast as they have been? But this could happen. And this is where you see that you start running out of bad things that could happen, but still, a meteor could hit the planet. We could have a new pandemic. We can all agree that, as ridiculous as they sound, the chance of these are not zero, right? So there is bad things that can happen. But look on the good side. What could be good catalysts for 2023? There could be a peace treaty in Ukraine, and maybe we don't even have to have a peace treaty. It's just we need the war to kind of stay the same, not escalate anymore. Now, what is the chance of that happening? I would put that into an 80-90% chance of happening, okay? Then inflation steadily going down is a good catalyst. And here's the thing. We are so bearish at the moment that inflation just not going up is even a good news. So inflation doesn't have to go to 2% or below 2%, but if it just goes to 6.4, 6.3, very slowly going down, this will be a major good catalyst for the market. Again, the chance of this is very, very high. Then the Fed could stop raising interest rates. Again, this is how bearish we have gotten, that the Fed doesn't need to lower interest rates. They just need to stop raising interest rate. Even that will be a very, very good news for the market. Here's a counterintuitive one. Unemployment could go up. And now the reason why that would be a good catalyst for the market, because that is the last thing that the Fed is waiting for to, stop being as hawkish as they are. So as counterintuitive as it sounds, that would be good news. And it's very likely that it's going to happen. And frankly, if the US economy doesn't collapse, even that is in the good catalyst, because so much bad news is priced in. So even if we just survive 2023, it's going to be a good news. So you can see that we are a little bit out of alignment, because to shock the market with bad news, you need to have insanely bad news to happen, right? But to shock the market with good news, you just kind of need the bad things to not get worse. We have very, very low expectations at this point. So I myself, this is obviously not investment advice, I'm buying every chance that I get. My two favorite stocks are Tesla and Palantir. And I want you to really remember this quote: be fearful when others are greedy, and be greedy when others are fearful. And obviously, even me, I get fearful when others are fearful. And I have to notice this indicator that, okay, everybody's fearful, I am fearful. And then this quote comes to mind. And then I start thinking, a little bit exterior to the situation. And then I understand what to do. And I truly believe, again, it's just what I think, that we are becoming in this situation when everybody's fearful, everybody's doom and gloom, and we will run out of sellers. And I believe that we are in the process of bottoming out. I hope you enjoyed this video. Let me know what you think, and let me know if you think I'm crazy, or let me know if you agree with me. Obviously, check out the Patreon link that is somewhere there. The first link in the description box below. Make sure you're subscribed, and I will see you in the next video. Thank you so much for watching.